What's up, you guys? It's Henry. It's time for us to address the stock market crash and discuss why it's selling off and what we might want to do about it. The stock market saw a pullback this week, mainly with tech stocks selling off. The market was just a fresh record high last week, but has pulled back mainly due to interest rates increasing. What's actually happening is two things. One, big institutions that manage wealth are shifting their money from stocks into treasury funds, because what you guys have to understand is that big institutions are not trying to get rich quick with their $100 billion. What they're actually trying to do is they're already rich and they're trying to preserve their wealth and grow with inflation. So the main thing that these big money managers do is shift their assets and park their cash in stable places to make consistent and steady but not large returns, because they're just trying to preserve the money that they already have. Since the treasury has now climbed past 1.5%, money managers are taking money off the table from stocks and rotating that cash into risk-free treasury bonds. If we Google the term stock market crash, you can also see more people than ever are Googling and concerned with the market rising too much too soon. So given all of these signs, let's talk about what's going on, the likelihood of another crash coming sometime soon, and then what you can do about it. Because I promise you, if you're prepared and ready to take advantage while keeping yourself calm and non-emotional, you're going to be better off than other investors. I learned a lot of this by reading finance books and studying the best like Warren Buffett, and one book that I recommend is The Intelligent Investor. And I've made so many less mistakes understanding that the market is on a discount when stocks actually fall. So in addition to watching the rest of this video where I will detail what I'm going to do about a potential crash, I want to mention a good way to listen to books like The Intelligent Investor, thanks to today's video sponsor, Audible. That's right, if you want to make more money, you need to educate yourself as much as possible so you can be a better investor. Audible lets you listen to books offline, anytime, anywhere, which is why I listen to investing books while I drive to the gym or the grocery store. I find it hard to find time to read since I coach students and I make videos, so downloading and streaming their thousands of audiobooks is a time saver while I drive, exercise, or cook a meal. Their library is massive with amazing books like The Intelligent Investor, and since Amazon owns Audible, I feel like they had the latest and greatest audiobooks. Check them out by visiting audible.com/investwithhenry or text invest with Henry to 500-500. And the best thing about Audible is they're giving away a 30-day free trial. With that being said, let's discuss the first rule in the market that will save you some money. Even though you can't time the market perfectly, it's important to know what to expect. From March 2020, when the pandemic sort of started, we saw some of the worst declines in the market from March to April, and there was actually a 9.99% drop on March 12th due to travel bans in Europe. 3 days prior to that, the market fell 7.79% because oil prices were crashing. The market crashed a total of about 14% in March 2020. So if you ask me, we can see a pullback in the market and it can't even reach 10% down. But something I learned and live by in the market is when stocks pull back, it's a great time to take advantage of lower priced stocks. I think too many people enjoy sales at their local stores, but they don't realize that a stock that is dropping is also like a sale. Since I hold so much Tesla and the stock has been pulling back, it feels pretty bad losing $200,000 in the last month, and that's money I couldn't even dream about a year or two ago. However, Warren Buffett's book says that when a stock falls, they actually become less risky and not more risky. That's because a stock that has strong fundamentals but is cheaper has greater support levels and is a better investment prospect to investors. Although you and I have lost some of our gains, new investors that missed the boat in a stock, say like Tesla, are now beginning to invest because they feel like it's time to finally get in at a reasonable price. Another thing that we need to consider when it comes to a stock market crash is that not all of them are actually crashes. If the stock market gains 20%, but then it follows by dropping 10%, that's pretty normal. Just like an airplane gaining altitude and losing a little bit in the clouds, that's the way the market works as well. As some investors see gains, others want to take a profit. When there's a shift like there is now with big money managers putting some of the stock funds into treasuries, we see the market decline, and some investors are de-risking their portfolios by selling the more volatile stocks. That's why we have seen technology stocks sell off harder than the broader market, because tech stocks have higher betas. Beta is a measure of how much a stock moves in relation to the market. The market has a beta of 1, and let's say that tech stocks are a beta of 2. That means that tech stocks are likely to be down about 6% because they're twice as volatile as the market. Tesla actually has a beta of 2.09, so it's actually proving the example that I just made. Stocks like NIO are closer to 3, coming in at 2.79. And that makes sense because NIO is a smaller company and more risk and based in China, so investors are less certain about NIO's future than they are with Tesla's future. All that being said, when the market falls, you want to load up on stocks that have been beaten down more than the rest of the market, so long as there's no issues with the company fundamentally. I want to say, as catastrophic as a market crash can be, do your best to change your perspective on it. Although financially it hurts, you have to take advantages of opportunities because riches are made in recession. The opportunities are really when nobody else is investing, when everyone is afraid that the market is going to keep dropping lower and market sentiment is at an all-time low. I'm not saying you should wait for these things to happen, but I am saying that you should look at it as a good buying opportunity for getting into stocks on a long-term basis. So really, at the end of the day, another market crash is going to happen. It's inevitable at some point. Will it happen this week, next week, or next year? Who really knows? But when you expect it will happen and it's normal, you can better prepare and know what to do so you don't panic and sell great long-term stocks. That's also my strategy when it comes to investing. I'm usually mostly invested in the market, but I sell call options and use that money to buy more stocks, or I keep it as cash in the portfolio when I see something that I really like. I don't sell any stocks when they fall because I enter stocks that I believe in long term. Instead, I do sometimes sell stocks like Microsoft and I redistribute the funds into stocks that I feel are down too much, such as Tesla. Most importantly, I hold my investments, I smash the like button, I smile at my Bitcoin, which I hold it with BlockFi, where you can get up to $250 on your crypto, linked below in the description. Definitely subscribe. Feel free to add me on Instagram here. I'll be posting stock updates there as well. As always, be aggressive in learning, but be safe in investing.